It's about that time of day again. Back in the action here once again. Hope you guys had a great day out there. We're back to work here this evening. It's, of course, Wednesday evening. It's August the 7th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you forgot, again, my name is Joseph, and I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is extremely important. My job tonight is to identify the best levels of support and resistance, get into the mindset of the market for tomorrow, and help identify the best setups for Thursday's trading session. And of course, we're going to cover all the charts here tonight. We'll take a look at the calendar here first of all tonight on the video. Then we'll open up our charts. We'll grab some oil, some S&P, Nasdaq, gold, and we'll wrap up tonight on that mighty euro. I'm going to start off here tonight on the black gold, the Texas tea, the crude oil futures, because boy, oh boy, what a run down today. Boy, they're panicking right now at OPEC right now, but they caught a bid. They caught a bid on some headlines here this afternoon. I'm interested to see if we can maybe catch a nice short covering rally. We got a plenty of space overhead of us. Let's grab that oil chart. Let's take a look at that oil chart here first of all and see if we can't put together a plan here for tomorrow morning's trading session. Now, of course, I've got this big run down, right? And I won't go into the details about why, and because it's irrelevant. So don't worry about the why, worry about the what. The what is we saw a very, very strong move down. That inventory report came out at 10:30 and kind of kicked them while they were down, right? And it kind of headed lower a little bit as well. We actually went all the way down to that 51.10 low that we talked about in last night's newsletter, right? One hell of a move, right, as we go. But then as you can see, right, we get, and the rumors are there was a headline that came out from, I believe it was Saudi Arabia, their oil minister that came out this afternoon said, we're going to do something to stop this, right? And of course, you know, they say this every time, right? Every time the market drops like this, all the headlines read, OPEC's going to take action, and then we get a bit of a rally, and then it comes right back down again. So we'll obviously see how the day plays out tomorrow as far as any sensationalization, right, of those headlines. But right now, though, we know it's a 1, 2, 3, right, reversal on this. I know the market's bullish right now. It is obviously overall bearish, right? But we know we have this very strong bull move. Anytime we see a strong bull move in one direction, we always know we can probably expect another leg. And I have my eyes on buying some key support levels here at the low of a channel in that buy zone. So we'll talk about 2, maybe 3 different entry patterns I'm watching for here to buy that dip on oil. Also, too, if the market keeps rallying higher, this becomes a short covering rally. These are very aggressive rallies, these short covering rallies. And I'll talk about 2 very distinct patterns to look for to grab this thing before it runs right back up into that tiny trading range that's waiting overhead. I'll also talk about if this market collapses back down to the low, right, what our plan will be if the market collapses back down again, right, if the traders sell into this pullback. So we'll talk about all of that here tonight on the video. So we'll go into the more details about those specific entry patterns here as we dig into this video tonight. Over on the S&P here this evening, S&P is obviously bullish. I don't think there's any question about that, right? We definitely had that big, deep pullback at the beginning of the day today, and of course got that big rally up, right, and running higher. Now, of course, we know we're bullish, but we definitely can see we're right back around those highs that we saw earlier this morning. So it looks like the buyers got what they came for. It looks like they're seeing a little bit of rejection at those new highs right now. We know we're bullish. I just definitely don't want to buy here. I'd like to see some more proof before I start buying this high. I want to buy a pullback. And so I've identified some key levels of support. I've got a prior reversal line there at 66 3/4. I have a channel line here, of course, right, coming up off of that low. And with that, I've got about a handful of patterns I'm watching for right now. I've got, just what it looks like right now, I've got about 4 different entry setups that I'm going to be looking for here on that pullback. And we'll talk more about those specific setups based on how the market pulls back here. We'll also talk about if the market keeps going higher because we have that big channel, right, in play from last night's newsletter. So we're going to dive into that in a lot more detail here. We'll talk about the up, down, and sideways on the S&P. Over on the Nasdaq, at first glance, the Nasdaq is very similar to the S&P, but what I like about the Nasdaq is there's a lot of things we can kind of layer on top of this Nasdaq. It's obviously a bull market, right? The rally continues. Nice, strong bull move going higher. And again, much like the S&P, we're kind of right back up to retest that high that we made early in the pre-market here this morning. We know we're bullish. We know we're running into some resistance, so we really don't want to buy up here. It also looks like we have a bit of a trading range with some double tops up there. And I think if I have to sum it all up, though, really there are two channels right now that really tell me everything I need to know. One is this hidden channel, right? That's a real important clue. Obviously, that gives a great level of support. But in my opinion, right, really the big clue right now is this spike in channel. This spike in channel, when you look at the spike in channels tell us exactly where to be looking for that pullback right now. So I'm going to use that spike in channel in combination with the larger channel to kind of structure where I'm looking for that pullback. And then we'll talk about these specific entry patterns I'm going to be using on this NASDAQ tomorrow. So make sure you keep tuned in on that. We'll go into the NASDAQ here as well. And of course, over on gold, the yellow metal here on gold. We talked about this last night, right, on that newsletter. We got that nice pop higher here. It just kept on going. Market's bullish. You can see right now we are 3 legs up, right, to that measured move 1, 2, and 3. A triple measured move oftentimes results in a trading range, right? Nobody wants to keep buying high anymore, right? But nobody's yet taking profit or selling this market yet. So the market's kind of pinned, right, up towards its highs. Now, knowing that we are so bullish here right now, knowing that we're bullish here right now, I want to be a buyer. And knowing that I have this trading range, I want to buy down in my battle zone. Now, of course, I've already seen a couple examples of this already today, but we're going to be looking for buy setups here to buy those dips. There are 2 specific types of setups we're looking for here to buy on those pullbacks, right? We'll talk a lot more detail on that. And then, is it possible this thing keeps going higher here tomorrow? Do I hear 1600, anybody? It's definitely possible. Anything is possible with the headlines we're seeing right now between the U.S. and China going back and forth. So we'll talk about a couple patterns to look for if this market wants to catch a bid and tries to go higher here. I'll talk about what not to do up here, and I'll also talk about how to trade that breakout on the gold. And then over on the euro, I'll tell you, there really isn't a lot of evidence of a range until today. We got some higher lows, we got some lower highs. I'll tell you the biggest clue right now, and of course we talked about this last night on the newsletter, strong move up. I had this nailed as a range as of Monday, but as you can see though, it's settling right into that range right now. We got that pendulum swing. So everything looks to be settling in here right now around this 12,400, 12,500 area. It's a bull market into a trading range. That tells me I want to buy low, and I've got 2 very simple but very important patterns to look for to buy off of that low. A range-bound market also tells me to sell off the high. Now, because the overall market is bullish, if you tune in every evening, you know that sell pattern off the high needs to be a little bit different than the buy pattern off the low, right? The buy pattern off the low is a little more aggressive. The sell pattern off the high is a little bit more conservative. We're going to break all of those details down, of course, right, on tonight's video newsletter. We'll also talk about what a breakout looks like, right, if it breaks out higher, and of course, if we get that reversal as well. So a lot to cover here tonight on the video. Euro, gold, NASDAQ, excuse me, S&P, and crude oil. We're going to break all of this into small bite-sized pieces. But before we jump into the video tonight and go into details on this, I want to make sure to remind you that just before I send out, or just before I publish this video on our YouTube channel every evening, I always send out an email to everybody on our mailing list. That way, everyone on our mailing list knows exactly when the nightly newsletter goes live, and they can tune in and grab those strategies and trade trade with them. So I want to make sure you get that email. I want you to be one of the few folks that gets this right hot off the presses every evening. And to do that, just join our mailing list by giving me your first name, a real email address, because if you don't give me a real email address, how are you ever going to get that email every evening? And then hit that subscribe now button. Now, don't forget, when you subscribe to join the mailing list, your job isn't over yet. You still need to go in and check your email, because I'm going to send you a very important welcome email. And in that welcome email, don't forget, there'll be a verification link in there. I need you to click on that verification link to activate your account. And also, too, there'll be a bunch of great goodies in that welcome email, because you know me, I'm always trying to help you guys out, right, in your trading careers. So join the mailing list. That way you never miss a beat. And again, that welcome email, I'm going to fire it off to you right when you join. Sometimes those emails get stuck in your spam filter. So if you're expecting that email, check that spam filter if you don't see it. And before we jump into this video tonight, I need a couple seconds of your time down in the comment section below. You know me, I'm always trying to make this newsletter the very best it can be. I have a question for you. If you could go back and turn back time, what would be some advice you would give to the rookie version of yourself, right? If you're like me and you've been doing this for a while, what would you tell the rookie version of you? If you could jump into a time machine and go back to the beginning of your trading career, right? What are the most important things to avoid? What are the most important things to focus on? What's some advice that you would give to the rookie version of yourself? Or maybe you are a rookie. I have a different question for you in the comments section. If you are a rookie, in your opinion, what's the biggest obstacle standing between you and becoming confident and consistently profitable? I'd love to know, if you're a rookie, at your spot on your trading journey, what's the most important thing for you? Because I want to make sure I cover more of that in this nightly newsletter. So drop me some comments in the comment section below. It always means the world to me when you guys spend a few seconds of your valuable time to give me those comments in the comment section below. And while you're down there, don't forget, give me a thumbs up on the video tonight. I'll tell you right now, that goes a long way to helping me expose this video lesson to other traders who can really use this valuable information as well. So give me a thumbs up if you tune in every evening. That really means the world to me as well. I appreciate you guys spending all that time here with me every evening. And don't forget, if you have any questions, you're always more than welcome to call the office anytime. You might have questions about the best brokers, the best charting software, or maybe you want to get involved with our free trading classes, or join our trade room on a free pass. Call that toll-free phone number anytime, right? I'm old school. I actually talk on the telephone. You know, kids, there used to be a time when we actually spoke to each other on the telephone. Call that toll-free phone number, right? I promise, no funny business. I'll pick up that phone, answer all your questions. I always love talking to you. But in the meantime, though, let's get to work here tonight, shall we? I look forward to reading all the comments right after I finish up here tonight as well. Tomorrow, of course, is Thursday, August the 8th. As you can see, tomorrow is pretty much a wide open day tomorrow. We've been talking about the lack of scheduled news here all week. We do have news report tomorrow at 8:30 a.m. Eastern time. So we do know tomorrow we have the jobless claims report at 8:30. But, you know, honestly, the jobless claims report historically doesn't really move these markets very much. It looks like it should be a very big market moving event. It's got a red star next to it, right? So it's supposed to be a market mover, but honestly, a lot of times these jobless claims, they fall flat on their face. I don't think anybody really trusts those numbers anymore. I'll tell you, the last time I saw jobless claims actually moving these markets was, it was probably 2008. Right, 2009, before the last credit crunch, right, when that jobless claims number became pretty much irrelevant. You get more movement these days from the JOLTS report, right, the job openings and layoffs transfer survey, than you do from that jobless claims report. So there is news tomorrow at 8:30, but probably not going to be the big explosive news report that we're all hoping for tomorrow morning to light that fuse early. As always, though, this week has been what? It's been about trade. It's been about trade. It's been about currencies, right? All this morning we heard about all kinds of Asian countries, devaluing their currencies, cutting rates, right? Making their transfer rates lower. And of course, it's been kind of a tit for tat for that this week. A lot of stuff going on that's off the schedule, right? So definitely nothing scheduled tomorrow that we are really putting our finger on, but you better believe we'll be paying close attention to any headlines about the U.S. and China. Things appear to be civil right now, but there's a bunch of tit for tat going back and forth right now, so who knows when the next big Twitter mess will go on or whatever will happen and these markets will explode. And of course, as always, right, we'll be keeping our eyes and ears open every morning in our trade room, opening up at 8 o'clock Eastern time. I also want to give you guys a heads up as well. Unfortunately, I will not be in the office this afternoon. There will not be a newsletter tomorrow afternoon. Not to worry though, be back to our normal schedule next week. And for the foreseeable future, we'll have pretty much a consistent Monday through Thursday schedule going forward. I know I've been out of the office a little bit lately, but it is the summertime season. I have a very, very important engagement to be at tomorrow afternoon, and unfortunately, I will not be able to be here with you guys on this newsletter. So no newsletter tomorrow night. I'll make it up to you, though. We're back to our normal schedule here for quite the foreseeable future when I come back. All right, so back here next week on the newsletter. In the meantime, though, let's get us all prepped up here for tomorrow. Right? Forget about next week. Let's make some money tomorrow. Let's start off here with crude oil, get some S&P, some Nasdaq, some gold, and of course, we can't forget about that mighty euro to finish off today's video newsletter. What do we know about oil right now? We know that oil started off the day in a very narrow range. Then something spooked these markets. 730, 740, the market just took off, right, to the downside here this morning. All the markets did. Well, besides, of course, the euro and the gold, right? Equities dropped, oil dropped, everything pretty much just hit the skids here and ran lower, right? We ran all the way down to that 5110, right? That 5110 we talked about in last night's newsletter. That's that low from, what is it? It was like June or something. I can't recall, right? It doesn't really matter. But it was a major prior low, right? Major prior low. And you can see what happened off that low, right? They sat there for a while, and then I would assume that this run higher here is probably the headlines we saw this afternoon from, I believe it was Saudi Arabia, who said, this is enough, right? We're going to do something to take care of these prices, right? Who knows? Who knows, right? It's all talk right now. The hard part is convincing other oil-producing nations to stop pumping, right? I mean, no, you stop. No, you stop. No, please, you have to stop, right? That's the hard part. They can say they're going to curb all this stuff, but as soon as the prices go right back up, it's drill, baby, drill, and the prices come right back down again. So the bottom line is we've seen this before. We know what's happening, right? They're kind of spooking the market here. And the bottom line is it doesn't really matter why the market's running higher. This is a very strong move higher. We get this very strong move higher. Anytime we see a strong move in one direction, we know we're going to probably get another leg. Now, whether or not we pull back and get the second leg right now, or whether or not it keeps going higher and we get the second leg later on, that is to be determined, right? That is to be determined. So what I want to do right now is I know the day started off inside that range. I'm expecting there's a big old bullseye right back up at that same spot here. I'm expecting that 59 to be a big, big target for those sellers. I'm also anticipating, right, speaking of sellers, I'm also anticipating that this market may start to rally higher in the overnight, because this big strong market, or this big strong spike up, when the market opens up again in Asia, everybody who was holding their position short into the close, because who knows when this bloodbath will end, right? I mean, heck, we almost hit 40s, right? Almost 50s today. So, it's very easy for traders who are currently short. They get back to their desks and they say, what the hell happened, right? Shoot, I better get out of my short position. And that oftentimes results in a short covering rally. So we definitely may see this market start to push higher here in the short term. So I've got to really be ready for the pullback and the short covering rally. Let's talk about the pullback first, right? The pullback is kind of the easy part, right? Now, there's a couple different ways in which, right, we can use a pullback. Now, what I'm doing here is there's not a lot to work with here. I would typically draw my 1, 2, 3 reversal. I would typically draw that channel like this. The problem is that channel is a little bit too steep. And what you want to think about is how can I find a channel that will give me the ability to buy low, to risk small, to earn large. If I draw a really steep channel here, that channel is going to give me a false sense of security because it's so steep, there isn't going to be a lot of way for me, right, to buy a very deep pullback there. So what I do in these situations is I kind of think ahead of it and go, okay, I want something a little bit flatter. So I go to the next level out, right, and grab that high there and bring it off of that low. Now, hey, all I'm doing right now is I'm just making an educated guess as far as where that channel will be used for. And again, I would imagine this would be the overnight session we're talking about right now. I might be right, might be wrong. I've seen probably hundreds of thousands of these channels in my career at this point. And so typically this is what you want to look for. You want to look for those channels that give you the ability to get a little bit lower pullback, a little bit deeper pullback. I can also see, of course, I got some prior swings here, right, to create that battle zone. So there are a couple different scenarios that I'm looking for here on the pullback. For example, a deep pullback. Deep pullback means it goes below the moving average, right? Deep pullback. If we get a deep pullback, that's a gift, right? That is a gift right now as far as I'm concerned, because you're going to have sellers that will try to sell off that pullback, right? They'll try to sell off that pullback. The market's way too bullish at this point to be selling this market yet, not until they can take back control. And at that point, we know exactly where those sellers are going to have their stops, and we can buy right into those stop losses with a failure pattern into a pullback pattern combination. So if we get a really deep pullback, think about it. If we can get a nice pullback below that moving average, let's get those sellers to try to take the bait off that moving average and buy into their failure. Then again, right, the pullback coming over. And again, the big target's overhead there, right, up around that 53, 59 area. Now, sometimes we don't get such a deep pullback, right? Sometimes the market just pulls back relatively flat, right? So it pulls back, shallow pullback. Look for that nested, that 1, that 2, and go. That's always a nice, easy setup there, right? 1 and 2, and then go from there, right? Let those bears try to sell a couple times, right, as we go. Now, what if we keep going higher, right? What if we keep going higher here? We keep going higher. At this point, that sense of urgency will really start to affect traders in the market. And there's really two patterns you want to see here. The one I'm really looking for here is that short covering rally with that 2-try trap. That is the 1, the 2, and the trap as we go. This would be another gift, right, from this market right now. So we keep going higher here, right? We keep going higher. The bears try once. We go higher. Bears try twice. Little trap, right? And that might be all you really get as far as a pullback. No joke, right? That might be all you really get as far as a pullback. Another option would be maybe we don't get that deep pullback and we get a 1, 2, 3 running higher, right? Let's say, for example, we don't get a deep enough pullback, but at the same time, it's not racing higher. Now, grab that high, grab that low. There's your new spike in channel, right? And there's the entry from there. So those are 4 different scenarios I'm watching for. One is the deep pullback, one is a shallow pullback, one is the aggressive run higher, right? That short covering rally. The other is kind of that cool, calm, right, and collected pullback as we go. There is potential for a range up here. Anytime we see a spike, a possibility for a range, but I just doubt it. I doubt it. This market moved too far today. I just don't think you're going to see them hold this. If they do, hey, who knows, right? If they do hold it and we go sideways, the size of that range, right? The size of that range will tell me where my buy zone is. We don't quite know enough about that yet, but we'll talk more about that tomorrow morning in our trade room. And what I'll use that 2-try failure pattern, right? Get the pullback once, let the bears try twice. We'll use that 2-try failure pattern to be a buyer going back up from there. So if it does go sideways, we at least have a plan put together, but I doubt it. I really doubt it. I just don't think you're going to see, I would imagine at 6 o'clock Eastern time when this thing opens up, we're probably going to see that short covering rally, and at least you'll be ready to capitalize on it. Now, we've covered a lot so far, right? We've talked about the deep pullback, right? The failure patterns, the pullback patterns, the 2-try breakouts. I want to give you a deeper dive on this, but I don't have a lot of extra time in this video. So here's what I want to do. If you want a deeper dive into all of the patterns I've talked about, how to draw the right channels, my 4 favorite entry setups, I'll put a link in the upper right-hand corner here for our free trading classes, right? I'll also put a big red button right below the video tonight on our blog. I would highly recommend, if you're serious about your trading career, if this is more than just a hobby for you and you want to get serious about making daily income in the futures markets, right? Grab that free course. It'll teach you the fundamentals of the same strategy we use every day in our trade room. You're going to love it. Everybody loves that free course. I spent a lot of time making it, and I know you're going to love it as well. So grab that free course linked up in the upper right-hand corner, and I'll see you inside the members section of our website, and you can learn more about our 3-step strategy. But in the meantime, though, let's get some S&P going here. Now, there's a lot to talk about here on the E-minis, right? But the most important thing right now, though, is we know we're bullish and we're sitting on major resistance, right? That's the most important part. Let's back this up a little bit, because we talked about this last night on the newsletter, if you recall, right? Yesterday evening, this was a bull market into a spiking channel, right? That's what it was. So we knew that the buyers would be trying to buy off that low, and they did, and they sunk back down. Most important thing about this is we had a big run up, a deep pullback, and we retested the high. Okay, this is a classic trending market, right? Strong momentum. Buyers don't want to buy high anymore. They let the market pull back, and they buy it at a lower price. They then take their profit at the retest of that high. If they can keep the price going, then we look for this as a measured move. 1 leg, 2 leg. So there's a big, hefty measured move waiting back at, I don't know, probably all-time highs, right? But we're definitely not there yet. We definitely know we're bullish, but again, we're sitting right at the high of that range at 89 and a quarter, 89 and a half there, right? Give or take a few ticks there. So we know we're bullish, but we know we're at a major level of resistance in the bigger picture. Now, at the same time, we can also see 1 leg up, 2 legs up, another typical trending environment. In a trending market, markets love to move in twos, symmetrical moves over and over again. We also know that in a trending market, markets love to use channels, and we can draw a trend line off that low, fits beautifully at that high, and this is what I call a qualified channel, right? It's got 3 tests, channel rotation looks great, and so we know there's going to be a lot of buyers here. Market's bullish. They don't want to buy high up at that 89 and a quarter up there. They want to buy low, and it looks like we've identified a great spot for those buyers to do that. We can also see too, it's lined up with a beautiful reversal line. I mean, if you were to open up a textbook about the perfect setup for a trending day, this really would be it, right? You've got that prior swing high to be used as, right, resistance, then into support. You've got the low of this channel, right, after the measured move. Most of the time we get a measured move, you'll see a deep pullback and a retest of that high. So a lot of reasons why we want to take this trade long. All we need now is to wait for a pullback. So, it sounds very simple, and it really is, right? We want to be ready for the market pulling back. There's also potential here, and you'll see the Nasdaq. The Nasdaq might be the giveaway on this. There's also potential the market may go sideways up here, right? If nobody wants to take profit, for example, right? If none of the bulls want to get out of their positions, the market may just stick up here, right? Like gold is doing right now. So we'll be ready for that tomorrow as well. And of course, we may see the market run higher, right? If it tries to run higher, we get the top of that channel that we want to be aware of as a big target overhead. So, I know it sounds very simple, right? But up, down, and sideways. So the first thing is how do we trade this pullback? So if we get a pullback here, the obvious kind of elephant in the room right now is going to be that trend line coming down. Right? That trend line coming down is going to be is kind of the big problem we have right now. Now, when it comes to a pullback that starts off and kind of bounces, then goes lower, what I'm going to do is, and I don't know enough about it yet, but once we have enough information, we'll look for the correct trend line. What you want is that trend line to fit well. You want to fit like a glove, right? You don't want that trend line just to hit one high. You want it to kind of smooth off all of those highs. And the reason why I mentioned how to draw the proper trend line is because we'll then try to use that trend line as a key level of support. Now, we call this a two-legged pullback pattern, or 2LP, right? A two-legged pullback pattern, or a 2LP. Here's some of the secret of the two-legged pullback. You want to make sure that there's air, right? Some open space. There's daylight between the high of that move and that trend line. Okay, for example, you really don't want to get involved with it if it grinds down, right? Stay away from the grinders. You want to draw that trend line with the best fit overhead, and you'll learn a lot more about that in the free trading classes, right? You want to go up, some daylight, come back over, right? And that's called the two-legged pullback setup. Okay, and again, when I say daylight, you want to be able to see the background of your chart, right, between those candlesticks. That's going to give you, right, the best opportunity. Now, sometimes we don't get that deep pullback. Okay, so if you don't get that, what you want to look for is the 1, the 2, and the trap instead. Now, why a trap? The reason why you want a trap in this scenario is because you've got that major resistance waiting right overhead. And a trap setup is my favorite way, it's also the most reliable way, to buy when you're concerned about having just a little bit, just not enough open space overhead, right? Does that make sense? So if we don't get that deep two-legged pullback, look for that 1, 2, trap low, and back up we go from there. So it's going to be a little bit of a thread in the needle, right, on this pullback, and it's kind of the way it looks to be pulling back here right now. Again, most important thing is we're looking for it off the low of this channel. Now, what about a range here? Okay, ranges are pretty easy. Once we find a range, if it does go sideways here, we'll use the size of that range to identify the buy zone. Now, we don't quite know enough yet, but you'll see in a moment here on the euro and the gold exactly what I mean by that. So stay tuned on that for more. So we'll find our buy zone, right? This will be a little buy zone down here. And we'll do this together tomorrow morning once we know more about the range here. If we see that range down here now we look for that two-try failure pattern. So if it starts going sideways on us, right? Market goes sideways on us. Let this market pull back off that high, get that moving average coming over. Get those sellers now to sell off the moving average, right? We call this a 1, 2 try failure pattern. And we're buying now, making sure not to buy inside the range, kids, okay? Stay out of the range there. You want to get into that move before it goes back into that range, right? I don't want to be buying it inside that range because now my risk is here and my reward is here. Does that make sense? Right? If I buy it below the range, my risk reward is much better. And that's the difference many times between winning and losing, right? If your risk is greater than the potential reward in this trade, okay, then you're not going to have very good results that way. So stay out of that middle, right? We call that a 2-try failure pattern. Now, what if we go higher here, guys? What if we go higher? Well, first of all, if we do go higher, that channel that we described earlier, that channel right there, if we do go higher, we have to assume the top of that channel is going to probably be the target. Okay, so be aware of that. So if we know, let's just say, for example, get rid of that real quickly here, that's the major resistance right there, right? That's our target. There are two basic patterns that you want to look for as we go higher, right? The first one is that same type of short covering rally pattern that we talked about on oil, right? It's a strong move up with a 1, a 2, and go. What you're doing is the first pullback are the buyers taking profit. The second pullback, those are the actual short sellers. And then we're going to buy right into those stop losses because when you're buying high like this, because this is buying high, you're not buying at support, that's for sure, right? You're buying high. You need those sellers to try to commit off that high. You need their stop losses to fuel that move higher for you. So that's going to be really important to get that pattern. Or, again, we may get the 1, 2, 3. Now, that will be enough confirmation for me. I'm going to mark up that high, mark up that high, bring it down to that low, and that's going to create this hidden channel. And we can buy the low of that hidden channel. And just so you know, the low of that hidden channel, it's usually going to be a failure pattern into a pullback combination. All right? And if you join that free trading course I mentioned, right? I mentioned that free trading course. If you join the free course, you'll learn all about the failures, right, and those pullback patterns. Again, rather than go into a lot of small details in this video, I'll refer you inside the members section, and you can, of course, right, just binge on that free trading class and learn more about these patterns. Okay, so keep that in mind as the market goes higher. Failure into pullback combination off the low of that new hidden channel. Now, the one thing we haven't talked about yet is how does the market reverse? And this will apply to oil too. What will a reversal look like? A reversal starts off with a strong counter trend move. Then we wait for a pullback to the moving average. Once we get the pullback to the moving average, then a strong move off the moving average. We call this a what? A 1, 2, 3 reversal. The key is you want to see some pep, right? You want to see those sellers jumping off that moving average, right? Once they jump off that moving average, now you know the gig is up. The party's over for the buyers. Mark up that low, right? Up to that high. Okay, don't get wrapped up in that high right there, right? Focus on the big high. That will typically be where you get that pullback to off that hidden channel, right? And of course, off the top of that hidden channel, I'm looking for trap patterns. I'm looking for buyer failure patterns. I'm looking for, right, seller pullback patterns. And again, you'll learn all about those specific entry patterns, right, in that free trading course. Okay, so now you know the buy side and the sell side. All we need now is a little more information here from the candlesticks, and we'll be off to the races here tomorrow. Over on the Nasdaq. Now, Nasdaq is very, very similar to the S&P. There's a little bit of a difference here, a little bit of a slight wrinkle of a difference there. But let's go back in time. Take a quick look at the Nasdaq here. And let's just kind of refresh, right, from last night's newsletter. In last night's newsletter, we talked about that big move up, that pullback, that higher high. We drew this as a spike and channel, right? And we knew that buyers would be trying to buy off of that low, right? So if you watched last night's newsletter, you were ready to go buying off of that low. Well, then again, as I mentioned earlier, right, something spooked these markets and all hell broke loose, and they got that big run lower, right, about 7:30, 7:45 Eastern time this morning, right? That big move down now, go back out here real quick, that big move down is nothing more than a strong move up. Okay, the buyers are like, nope, we're done buying high up here. We don't want to buy this high anymore. What do? They take their profit. Price pulls back. The buyers say, ooh, this is better, right? I like dips, right? The buyers buy the dip. And of course, where's their target? Their target now is right back up to retest the high. And again, like the S&P, if they keep going through this high, now this becomes a big measured move, right? Trending markets love measured moves. So we know where we are, right? We're sitting right up at that high, big move up, deep pullback, retest of that high. And so we know we're bullish. There's no doubt about that. But we also know we're sitting right at a major level of resistance. So much like the S&P, I want to wait for a pullback, right? That would be ideal. But here's where things get a little bit more interesting. So on the S&P, we had that big bull channel, if you recall, right? I drew off the lows here. This one's a little bit different, right? Like I said, there's a couple small wrinkles that are a little bit different here on this NASDAQ. First of all, whenever I see a market kind of make those reversals like this, 1, 2, 3, I always like to draw off of those highs. You know, we talked about this on oil, right? And ideally what I'm looking for here is I'm looking for a channel that allows me to buy nice and low. Because when you buy nice and low, that gives you the ability now to risk small to earn large, right? If I have a nice deep pullback, I can risk small to earn large. And the reason why that's so important is not because of the money. Right? Yeah, I love the big profit targets, but it's because of probabilities. See, when you have a big potential reward on a trade, what happens is it attracts more traders, right? If there's a big potential reward and we attract more traders into it, guess what? That trade now becomes a much more reliable setup. So it's not just because of the money. Well, I guess it is because of the money, right? Because there's more profit potential on a deep pullback, more people pile on, and the trade works better because of that self-fulfilling prophecy. So we know we want to get that pullback here, and I'm drawing off of this high, and again, down to that low. Okay, so that's where that channel is, and I want to be a buyer off of that channel. What I think is the big clue, though, is this recent strong spike up into a very narrow channel. What do we call these? We call these spike in channels. Now, spike in channels are notorious for one very simple thing, and that is a deep pullback into the base of the channel and the first pullback off the high, right? So there's the base of that channel. There's the first pullback off that move. This now, right, could be its own little buy zone right there, right around that 75, 7,500, 7,520. Okay, don't worry too much about the small details on that. It's just in the overall area there. So when you look at this now, it all makes sense, right? Now we get the buy zone off the spiking channel. The low of that channel there, this is just asking, right, for buyers just to attack down here. So I definitely want to be a buyer on this. As an added bonus too, we have a double top up here. And that may not sound good, but remember the S&P? The S&P had this two-legged pullback setting up. And so we had to worry about that trend line coming down in the S&P. The Nasdaq doesn't really have that problem. So we can get that strong pullback, we can get it clean, right, and get that rise going back higher here. One more thing I want to point out here too, before I forget, is this trend line coming down. Okay, now this trend line may not impact us too badly here, but it may result in, right, a really, really deep pullback. So I want to kind of cover all those bases here in this video, right? What if it goes up? What if it goes down? What if it goes really down, right? And what if it goes sideways? So first of all, what I'm anticipating here is I'm anticipating a relatively sharp pullback, right? That moving average comes over. The sellers now, of course, they try to sell off that moving average because obviously this will make them think this market is done going higher, right? The bears will try to come in and sell off of that moving average. And when they do, we now know where their pain points are, right? Now we know where the sellers start to suffer. And that's the goal. The goal is that I'm not going to try to buy it as it goes lower, right? I'm not going to buy into that move lower because a lot of times you try buying into that move lower and they'll come right in off that moving average, right? You'll buy it, your stop goes right below that low, you get stopped out, and it runs you over, right? So the bottom line is you don't want to buy it too early because a lot of times it'll come down, stop you out just to see it run back up. So instead, rather than trying to time those absolute lows, right? I don't care about getting the lowest possible price. I just want to grab the big chunk of the move, right? So don't try to pick the absolute bottom on this, but when this market tries to sell off of that moving average now you know you're at the right location, you're on the right side of momentum, the odds are on your side, the odds are not on the side of the sellers. We know where their pain point is, we know where the sellers start to lose money, we know where their stops are, and now all we have to do is look for a buy signal now to buy right into those stop losses. And then again, don't forget, I always like to keep my eyes open for that pullback as well. Okay, so look for that deep pullback, right? That deep pullback off the high. Again, deep pullback off the high, moving average comes over. Sellers try to sell into it. We, of course, now buy using our failure setup, right, into that pullback setup, and we are off the races now, going back up to retest the high of day. Now, also, too, keep an eye on that two-legged pullback that we talked about on the S&P, too, right? Draw the trend line over, use that trend line now as a level of support. And could you triple this up? You absolutely can. You can look at this now as a failure, right, into a pullback, too. There's absolutely no reason why we can't do a two-legged pullback into a failure, into a bull pullback pattern going higher, right? Can it combine or layer all of those setups on top of themselves? What about that deep pullback though, right? That trend line down here. What if it really rockets lower here? If it rockets lower, now there's going to be a lot more sellers involved than there would be if there was only a shallow pullback. So in these situations, because that momentum is so strong, the market becomes a lot more top heavy and it's more likely to collapse back down. So to absorb that momentum, again, I want to be a buyer because remember, until those sellers can actually hold it and run, until those sellers actually get the 1, 2, 3 reversal, right? We can't call this a bear market yet, right? A strong pullback is not a reversal. It's only a reversal if they hold and go. Because a lot of times what happens is it'll hold, try, and then right back up again. And that's why we look for the failure pattern. So the moral of the story, though, is if we get that strong move down, right, I'm talking real strong down to that trend line, right, it's going to be very, very bearish. Let the sellers try twice. Once, twice, and then up from there. That's my best. That's my way of respecting the short-term momentum. I'll tell you, if there's one thing, if I went back and told my rookie self, we talked about this in the introduction, right? What if you could go back in time and warn yourself, don't make this mistake. And the one thing I would tell my rookie version would be, right, chill out. Don't do so much. Just take it slow. Slow and steady wins the race. That's the first thing I would tell my rookie self, right? Once you learn to trade, you'll have that skill the rest of your life. So do it the right way and don't take shortcuts. I took too many shortcuts when I was a rookie, chat rooms and too many indicators and basically just trying to avoid actually learning and just trying to piggyback off everybody else. It doesn't work that way, right? You've got to learn the strategy, do it the right way, don't take a shortcut. But the other thing I would tell my rookie self would be, you got to respect the short-term momentum, right? Because when momentum is really, really strong, even if it's a trending market, right? Even if it's a bull trend, if we get a strong shot lower, those sellers are going to put up a fit, right? They're going to put up a big fight before they let this thing go. But after you see them try once, try twice, now you know the aggressive sellers are in, right? The conservative sellers are in, and at this market, you get a nice big strong signal candle there. Those sellers are going to panic. They're going to get out of their short positions, and the market will rally higher quite aggressively. Target back up now to retest that high. So that's one thing. You got to respect that momentum. What if it goes sideways here? It does look like this market now is going to go sideways. So what I'll do is I'll take the size of that range. And what I'll do is I'll bring it down here. Copy once, copy twice, right? And that will become, and there's a little bit more of a science to this. I'm kind of simplifying it just for, a shortcut for this video. I do talk a lot more about how to properly calculate the proper range, but this again will be good enough for this video right now. You'll learn more about that stuff in our video classes here. If we are going sideways here, I find my buy zone down here. I know where the range is. I look for that breakdown. I want to see those sellers now to sell that pullback, right? I just had somebody email me today, and I asked them. I said, "What's your favorite? What's your favorite? Your favorite setup?" And he said, "A breakout pullback." And I thought to myself, "I'm trading directly into your stops. Every time you get stopped out, I'm going right into your stops. That's me. That's me on the side of that trade, right? And probably a lot of you guys too as well. What happens is you get these breakouts." And I swear, I don't know what books you guys are reading out there. You know what it is? It's stocks. In stocks, breakouts are, illiquid, right? Penny stocks, cheap stocks, right? Breakouts work in the stock market. But in the futures markets, these are real liquid markets, right? They don't work very well in that. So a lot of times, right, you get that breakout and the bears come in and they try to sell that breakout, no matter what direction we're going, right? The problem is we're bullish. And the problem is a range says what? It says balance, right? And the odds are very much in our favor that we end up right back up into that trading range again. So if you're trading range breakout pullbacks right now, I'm tempted to say keep it up, right? Because it's helping the rest of us. But please, all kidding aside, do yourself a favor and stop trading those breakouts, or just do the breakouts, but do them on the cryptos, the penny stocks, the manipulated markets, right? The real markets, the real business run markets, the big, liquid stocks, not penny stocks, not cryptos, right? But real liquid markets, right? That you want to trade to really grow your account long term, right? Don't trade those breakouts. Now, how about a breakout going higher here on the Nasdaq, right? As we go higher here, what were those two breakouts again? It was a strong move up. Remember, you don't want to trade breakouts because oftentimes it'll go up and come right back down again. So no breakouts here. Strong move up. What was it again? You got it. 1, 2, and go, right? Bears try once, bears try twice. The first one's the profit taking. The second one is the actual sellers. That's why we wait for the second one. So we're buying into those stop losses. Or it's the 1, 2, 3 breakout higher. I'm obviously drawing this just to make it fit right now, right? But 1, 2, 3, you do want to see some strength going higher here. Mark up that high, mark up that high. down to that major low, right? That'll usually be where you get that deep pullback. We talked about how you want that channel to be structured, so you don't want a steep, narrow channel. You want that wider channel so you can buy that nice deep pullback off that low. We'll talk more details about those hidden channel breakouts in our video classes. So now you know more about the Nasdaq here tonight. Got a pretty good plan there on the NQ. Wrapping up here now on the gold and the euro. They're both range bound. They're both bullish. On the gold, I think gold's pretty easy to see right now. Very strong bull market up, strong move up. The market pulls back. Sellers, surprise! Sellers try to sell off the moving average, and I'm shocked. You must be shocked to see this. The sellers fail, and we go right back to retest the... If only somebody would just teach this. You know what? We've been talking about something similar about this the whole video tonight, haven't we? This pattern happens over and over and over again, right? Strong move up, right? Relatively deep pullback. A lot of the rookie traders, a lot of the traders who are trading on real fast time frames, right? I don't want to see you guys trading on any 89 tick charts, okay? All right? Trust me, I know this because when I was a rookie, guess what time frame I was trading gold? 89 tick chart. Oh, no. Maybe you slow it down to a 144 tick. Come on, that's so fast. But Joe, the faster time frames, they give me more trades, said every broker's favorite client, right? Your broker loves you on an 89 tick or a 144 tick chart. It's signal. How do you know which is a good one, which is a bad one? That's the problem. When you trade those fast time frames, I get it. You get a lot more trades that way. But we are not optimizing our trading strategy for more trades. More transactions do not make us more money, guys. And if you haven't learned that lesson the hard way yet, I hope you'll take my advice. Trade a slower time frame. You want 3 to 5 high-quality setups. And sometimes, I hate to break this to you, you might have to wait an hour for a setup. Maybe 2 hours sometimes. Trust me, right? That's the way real traders do it. They're not go, trade, right? Those people don't make money. One person makes money, the broker makes money on those, right? So what happens is you're trading that 89 tick chart. On that 89 tick chart, what happens? The market pulls back. This looks like a bear market on an 89 tick chart, right? Moving average crosses, the sellers try to take the short, and it's a bull market, so no surprise that it fails. So I'll get off my soapbox here right now. But this is a very classic example, though, right, of how rookies will get in trouble. This is what I did, right? I made this mistake nonstop as a rookie, right? Big move down. Oh, lower low, sell the pullback. Nope, it's a bull market. Fails and goes back to retest the high. When they go back to retest the high now, they double top. No, it's not a true double top. True double tops don't matter as much, right? It's the area, right? It's a double top, and we pull back off that high. Anytime I see a double top on the chart, I now know range. Now, again, like I mentioned earlier, right, there is a science to this. How about finding the correct trading range? Once I have that trading range, that helps me now identify the buy zones now below. Now, remember, in a range-bound market, what is a range-bound market? A range-bound market is balanced. That means what goes down will likely come back up. What goes up might come back down because why? It's bullish, right? So we can't guarantee what goes up will come right back down, but what goes down will usually come right back up into that balanced area. And what's the best pattern for a balanced market? A failure pattern. Keep getting those counter trend sellers to try to sell off those pullbacks and keep buying right into their stop losses. So as we see this market running lower, I look for those bears to try it again. We know where their pain is, and we're now looking to sell right into those stop losses. Now, something of interest, though, is this falling resistance trend line, because this resistance trend line definitely gives me a valid concern with resistance here overhead. So it's not a big problem right now, but let's just say, for example, that we go up, right? We come back down, and now that trend line is starting to get a little bit too close for comfort. Okay, now we've got to take out a little bit different entry pattern and look for a trap. It's a 1, it's a 2, it's a trap, and go. Okay, now why do we need a trap pattern in this example? Because you've got that trend line coming down. And that trend line is going to cause traders to think twice before they buy high because they know they've got a level of resistance that's standing in their way. So look for that trap pattern. Probably not going to be in the short term, but as we get later in the session, right, tomorrow morning, 7 o'clock, 8 o'clock, 9 o'clock, that trend line starts coming down. Now, hopefully we get lucky and the market goes right back up and then pulls back off the high. If we can get a new higher high up here, then that trend line goes away. So that's the good news, right? The good news is if they run higher here right now, that trend line is gone, right? But if they hold this thing, right, if we keep going up and back down, now we got to keep that trend line in mind. I do want to use that channel low here, 1, 2, trap and go. Much better entry setup to avoid buying into that level. Now, don't forget, if we do sit here and go sideways, that will also get rid of that trend line too. So if we sit here and go sideways, if we sit and go sideways here, right, on that gold, right, wait for the pullback, the 1, the 2, right, get that 2 try again. Just look like strong move down, bears to sell it, right? We know where the stops are. We're buying up into those stops, right? If we go sideways here, right, strong move down, moving average comes over, sellers try to sell off of it. It's a failure. And if we have enough room, sometimes we don't, right? Failure into a pullback pattern, going back up to retest that high. Sometimes we just simply only get the failure pattern, right? Sometimes we don't have enough space for the pullback pattern. Make sense? It all depends on what? It all depends on where you are in relationship to that range. I don't want to take that pullback pattern. I don't want that to be up inside the range. I want to be nice and low below that range because, again, risk small to earn large. Now, what would it take for the breakout and go lower here? 1, 2, 3, right? 1, 2, 3. Really got to be a strong move outside this range. Okay, this market has been bullish. It feels like forever right now, right? So it's going to take a lot more than just a pull back to 1500 for this market to turn bearish. Okay, so if it runs the 1500, you're going to hold that, right? Hold it. Give me that run lower. Get that moving average coming over here. 1, 2, 3, breakout going lower here. Mark the low, up off that high. Now we know where our sweet spot is, right? And again, like I mentioned earlier, failure pattern, pullback pattern, trap pattern, right? Whichever pattern we get off the top of that hidden channel, right? In that sweet spot off that top. So make sure you get confirmation before you try selling this market, right? I don't want anybody to try to call tops like a lot of rookies did earlier on in the session. How do we break out higher? Same thing as always, right? We break out higher here right now. There's no reason why it can't keep going higher. It's the strong move up, the 1, the 2. That's the aggressive breakout. Let's say, for example, we run back in, right? Bam, something hits the headlines tomorrow morning. 1, 2, and go, right? Profit taking is the first one. Second one, of course, now, right? Second one is that sellers entering the market. That's why we wait for the sellers to enter. That we can use their stops as fuel. Or it's a 1, 2, 3 breakout. Not as much jump to it in that one, right? Mark up that high, mark up that low, and we're buying off the low of that new channel. Hopefully that makes sense, right? So as we go back up into that trading range, big strong breakout, 1 try, 2 try, up we go from there. Or maybe it's a not so strong breakout, but they hold the pullback and go, then we mark up that high, mark up that low. Now we've got some proof that we need, and now we can start looking to be a buyer, right, off of that low. That's what I'm talking about as far as waiting for proof, right? Because we don't want to buy high as we go. So gold is looking great on that. And again, no more 89 tick charts, right? Trading on gold, okay? Do yourself a favor. I know your broker's going to hate you. You're not going to be getting that expensive bottle of whiskey for Christmas every year from your broker. I'll tell you, I used to get some really nice gifts from my broker, and I was like, man, I must be taking too many trades out there. If you're listening out there, Trent, right? I got my eyes on you, brother. I got my eyes on you. Anyways, back over on the euro, wrapping up here. Right on that euro, I've got this strong bull market higher. Now, I'll tell you, we kind of used our trader's intuition this week, right, to kind of pick up on this range. And I'm honestly surprised the range is still in play here because there really isn't a lot of evidence of the range besides the pendulum swing. The amount of the move below the range is the amount of the move above the range, and that is uncanny, right? The amount of the move below is the amount of the move above, and you can see below, above. That's pretty obviously here right now. Nice strong run up. Buyers try to buy the pullback. They fail, and the market runs back down again. So we know we're bullish. The simple fact that those buyers never retested that high is enough for me to call this a range-bound market, a balanced market. We are bullish into the balance area right in the middle. I want to buy low. I want to sell high. But because of that overall bullishness, I have to choose wisely. There are two very simple patterns that we want to use when it comes to ranges, right? Let's say, for example, it's an overall bull market. And keep in mind, not just technically, but also fundamentally as well. This is a relatively rare occasion where the newspaper headlines also match the charts, right, that we're seeing right now. Same thing on gold. That's why I said last night, be very careful selling these markets right now, because the fundamentals and the technicals, right, are both lined up accordingly. You won't hear me talk about that very often, but right now that definitely is the case. So we know we're bullish. We want to be a buyer. I want to buy, again, down in that buy zone. I want to sell up inside the sell zone. And again, this is all based on the size of that trading range. Now, as we go lower, we know we're bullish, so all I have to do is wait for those sellers now to try to take this short off of that moving average, right? Sell that pullback. Now, sometimes these are very large, sometimes they're very small, right? You can see an example of a very small one, right, earlier on in the week right there. Sometimes they're much larger. But once I see those sellers committing off that moving average, now I know where their stops are, right? And we're buying, again, ideally buying before we get back into that range. You don't want to trade inside the range, because a lot of times you'll get a good pattern, but it will kick back against you. So be very careful trading inside that range. If we happen to get a much deeper pullback, maybe we get a pullback afterwards, right? Pullback and go, right? So it could be a failure into a pullback setup off of those, right, off of that low as well. Now that's the buy side. If I want to be a seller, the only difference here now is we know we're bullish. So as we go higher, what you want to see is you want the buyers to try once, try twice, and then sell from there. And we did see an example right here. You can see a great example of that right here, right? We go up. The buyers, of course, have control of this. So if you want to be a seller, let them try once, let them try twice, and sell into their failure after those two tries. Okay, the aggressive buyers started off, the conservative buyers, right, shaking their head at the youngsters out there saying, you foolish kids, right, buy lower, guys, right? They come in, they try to buy it deeper, right? The gray-haired traders out there, the wise traders come in to buy a deeper pullback because they know the value in risking small and earning large, and they're both getting stopped out because, again, right, it's a range-bound market. So we go lower, it's a 1, it's a 2, a failure back in. As I go higher, though, here, right, it's a 1, it's a 2, and then back down, right? So you want to be thinking in terms of the momentum is bullish. If I'm going to go against that momentum, I've got to at least respect the bulls enough. Let them try once, let them try twice. You want these to be lower lows, too, right? You want those to be 1 and 2. That's 21, 1 and 2. There you go, 1 and 2. Does that make sense, right? You want those two tries to be at a lower price, lower lows, because why? Buyers want to buy low. Sellers want to sell high. So that's going to be what we call a nested variation of that failure, right? We call that a nested, right? A nested variation. It's called a major 2 try at the low and a nested 2 try at those highs. The hardest part, as always, is staying out of that middle. Stay away from that middle. Wait for the breakdown. Sellers fail. Back in, wait for that break up, buyers 1, buyers 2, and back down. What about a breakout? What's a breakout look like? Breakout, 1, 2, 3, run. This is not drawn to scale, right? Could be 1, 2, 3, run, right? It's just as long as we pull back to the moving average and get a real strong jump off that moving average, mark up that hidden channel, and that now gives us now where that high is going to be, right? Failure patterns, trap patterns, right? Pullback patterns off the high of that channel. Or as we go higher, 1, 2, 3, same thing, right? Same thing. As we go higher, like on gold, we can use the conservative 1, 2, 3 breakout there, right? That is a very, very reliable setup. Okay, you will see most of the time in the first couple hours, if we start seeing big jumps, right, as we go into the Asian session, a lot of times it'll pull right back to that hidden channel. It takes some patience, don't get me wrong, right? Sometimes those hidden channels take a couple hours to develop, but again, what would they should call trading waiting, right? Well, what do you do for a living? I'm a waiter, right? I wait for trades to set up, right? They don't call it catching, do they? Call it fishing. Right? They don't call it catching. They call it fishing. They really shouldn't call it trading. They should call it waiting for trades, right? What do you do all day long? I wait for trades. Once I find a good trade, I wait for the next one. Get that one, wait for another one. That's all we do. And sometimes these trades take a while. Sometimes they do. You can't force them, right? There's really nothing in life that's worth doing that you can force. You just got to roll with it. Let the market give you, right, what it gives you. Just like fishing, right? Wise fishermen or fisherwomen, fisher people, right? What do they know? They know where the fish hang out, don't they? They know what good fishing looks like. They know what bad fishing looks like, right? A wise fisherman or fisherwoman knows where the big fish hang out. They know where to go look for them, just like we as traders know to look for the channels, the range expansions, right? It's very similar, right? Fishing to trading. Go out there and wait, right? Sometimes you got to wait to get the biggest fish on the dock, right? That's what you're looking for when it comes to these markets. Great lesson tonight here, guys. Stay patient for them tomorrow. Sometimes those breakouts, right, they do take time to develop. And speaking of tomorrow, what are you waiting for? Why haven't I seen you there with me every morning? We get together in our trade room and we trade the strategy together, because you probably have noticed the patterns are pretty simple. The channels, the ranges, the measured moves, right? The setups are pretty simple. The failures, the pullbacks, the strength, the traps. What's not so simple is putting it all together, right, in a moving market while everything's happening all at once. There's money to make. There's also money to lose. It's very difficult when you're a new trader to put it all together, let alone if you're making it worse by being in those free chat rooms where you're learning from other rookie traders, right? And of course on those 89 tick charts we talked about earlier, right? So hopefully I've given you some stuff to kind of keep you out of trouble. But again, every morning I'm going to make sure you know where the best setups are every single second of the session in our trade room. We open up Monday through Friday, 8 o'clock Eastern time. I want to see you there with me tomorrow morning. Join as a member right below me here tonight, right? As a member of our advanced membership. That comes with all of our video classes, all the tools, all the trading sessions, all the ongoing support. You can learn more about that classroom session right below the video tonight on our website. If you're not ready yet to be a member, that's okay as well. I've got a great free trading class as well as a free pass to our trade room as part of our free trial. So grab that free trial right to the left of my ugly mug tonight and join the free trial. Don't forget though, when you register for the free trial, I'm going to email you the confirmation. Check your email, check your spam folder. Call me if you don't get that stuff, right? I'm always here to answer that call and help you guys out. In the meantime, have a great rest of your evening. Again, I apologize. I will not be here tomorrow night on the newsletter. I've got a very special 60th birthday party that I cannot wait to celebrate with over the weekend. So I'm traveling right tomorrow afternoon. I will not be here with you guys right tomorrow afternoon. I'll be back here though full time next week as we transition into that fall season. I hope you're getting rested and refreshed here, because we are ready to rock and roll into the fall season. But that is a story for next time. As always, tomorrow morning, 8 o'clock Eastern time, join the free course. Join as a full member. We'll see you tomorrow. If not, we'll see you guys next time on our newsletter next Monday evening. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And we'll see you guys next time. Adios, amigos. Bye-bye for now.